Hi, folks. Welcome back to Money and Politics. And last night, I did not have my Twitter handle, so there it is. It had been a while. I thought it was still in there. And again, if you want to write me, moneyandpoliticsnow@gmail.com. For those who are just joining us, here's the statement that I'm not a financial broker or financial advisor. I'm not a registered broker or financial advisor. And basically, you can read it. It just says that I am sharing information. You can consider it or you can reject it as you wish. If you do intend on buying something, then that is your decision and your decision alone. I don't handle your finances and I don't make your decisions for you. I am, as I do with reporting, going to talk about things that happen, in this case, in the stock world. And I'll share some ideas about the stocks and why I'm picking them and why I wanted to bring them to your attention. I think it should go without saying, but necessarily let me say it anyway. There are no guarantees and all investment involves risk. So any stock I bring to your attention, even one that I think has some promise, doesn't mean it will make money, doesn't mean it will explode in value, doesn't mean it will go down in value. I'll give you the facts as I have them, and then you can go from there. I would say, just as a note of caution, which I've said in the past, we don't want to avoid risk, we want to manage risk. And that means that just like when you're driving your car, you don't drive 80 miles an hour in a 35 mile an hour zone. And so in the same sense, when you're investing, you can take on risk to make more money. Hopefully, that's the goal. But you got to balance your risk in your portfolio by how much money you put in any one position. Because I have learned myself the hard way. Every investor has. That something you think is going to be promising is going to fall on its face and you're going to lose money on it. If you're not prepared to lose money, then don't invest in the stock market. It's kind of that simple. Now, you do invest in the stock market because if you take responsible risk, you can make a lot of money when the stock picks that you have indeed prove to be winners. Now, that said, I'm not going to make this real long tonight because I went a half an hour last night just because I had to catch up on some things. And I'm going to follow up with, I talked last night about Nextech. I'm going to talk about it again because news broke today on Nextech. I knew it was imminent. And the news is that, let me bring up their chart. The news broke today that Nextech released their earnings for the third quarter. And if you go to Yahoo Finance, this is it, and put in the symbol, it's NEXCF. You see it closed at 83.5 cents. On relatively low volume, the volume there in the bottom of the first column was about 60,000 shares, where the average was, for the last 10 days or so, was twice that. But only 60,000 shares traded today. And if you look at the news right there, it says Nextech AR Solutions reports third quarter sequential growth as 3D modeling revenue surges 192%. Their revenue, not their earnings. They don't have earnings yet. But their revenue went up 192%. And you can read the article there. Some of the highlights that I wanted to bring to your attention, and I'll take myself out of here, was that Q3 technology revenues up 66% from the second quarter, hitting approximately $920,000. Q3 3D modeling revenue, so those are two different lines, surges over 192% versus the second quarter. The 3D model projection increased up 110% versus Q2. In the third quarter, technology services gross profit margin improved to 60% from the 37% that was reported in the second quarter of 2022. So they're increasing in the technology services their profit margins. And it says, as you can read here, Q3 gross profit was approximately $555,000 on $920,000 in revenue in Q3, and with a gross profit margin of 60%. And lastly here, let me bring up the from the article, the comment by Evan Grappelberg, who is the founder and CEO. And he said Q3 was a transformational quarter for Nextech AR as demand production and our revenue from 3D modeling significantly ramped up. This is evident with our sequential production of 3D models up by over 110% and our sequential revenue of 3D models up by over 192% over the second quarter. Our Q3 figures are showing that our 3D modeling revenue is now growing exponentially. That's what you want. Rapid growth. I'm just going to insert there. And I'll continue with his statement. With the announcement of a $700,000 3D model order to be delivered in the fourth quarter, and they already reported that before they announced it, but what he's saying is that that $700,000 isn't yet in the numbers being reported for the third quarter. So with the announcement of a $700,000 3D model order to be delivered in the fourth quarter, we are confident that Q4 will be another record quarter for Nextech. As it is still quite early in Q4, we do not expect to announce additional significant orders in the coming weeks, as demand and our production capabilities will only continue to increase into the fourth quarter of 2023 and beyond. So what we see here is a small company on the way up at 83 cents a share, and they have growing revenues and growing margins, no earnings as yet. I referenced there, or the CEO, I should say, referenced in his statement a $700,000 order. They also recently got a $6.7 million order, and you are seeing development, you're seeing progress. Now, I know after the Humble blowing up in our mind, blowing up in our portfolios, people might say, well, why should we look at this stock? Is this going to be something that, goes down in price like Humble did? And by the way, I'm going to address Humble in the future. I'm not saying Humble is dead. I'm just saying we all know the price went down to a penny, which was obviously horrific for everyone's investment. The thing I would say here in a quick comparison to Humble is Humble, which I reminded people before because they were getting so ahead of themselves, it started 2 years ago as a SPAC. And after they started as a SPAC, so basically what Humble did, to make it simple, is they started as a publicly traded company before they were a functioning company. And we saw them, put the wheels on the car and try to build the car while they were running the car. I'm not going to go further on that right now. What we're seeing with Nextech is that they have been working, and on Saturday, Thomas will join me because he is the one that brought this initially to my attention, and he's been following it much further. So on Saturday, I'm going to have Thomas join me, and he can give us a lot more background. I will have time, because I've been busy, during the week, to pull some clips from an interview that the CEO, Evan Gappelberg, did with the Wall Street Reporter on Wednesday, and I'll be able to have some clips of what Mr. Gappelberg said on Wednesday. And one of the things that, Thomas will give you the background. I think we'll add more context. I had given up on this company, I will tell you, Nextech, and because it had been, when Thomas initially brought it to my attention, it had been about $5 a share, went up to $7. That was an example, as we saw with Humble, where And by the way, which you get into a lot of these penny stocks, there's too many investors getting far too enthusiastic too early in the game, and they drive the price up. So I was in, I got out at about $4. Here it is down, came way down. But all the while the stock price went down in Nextech, I think it was about 25 cents in this past June, they were taking steps, working their plan, developing their plan, building up their infrastructure, and getting orders. And here we are today. So I'm bringing it to your attention for those reasons. What I just read to you on and you can go to Yahoo Finance and put in the symbol NEXCF. You can read the article and make your own decision. There's very few, given the economy right now, there's very few companies that I want to be bringing to your attention. This is one of the few. I expect that we will see progress in 2023 and beyond, hopefully. But I'm bringing it to your attention now because we are seeing them get some big orders. $700,000 that was announced and $6.7 million order. That's good money coming in for a company with the revenues and the size they are now. So that's it, folks. I won't go too long. I will remind you that if you want to follow me on and write to me in Gmail, you can do that. If you want to follow me on Twitter, there's the Twitter handle. And with Twitter, the advantage there is that sometimes I'll just, here's some news, short news for me to pass along. I'll also put, which actually I forgot to do yesterday, put my link onto my Twitter feed. And that is that. I would say if you like this, give the video a thumbs up. If you want to subscribe and you haven't on YouTube already, do that. You can subscribe on Twitter. I'm getting back in the game. What I would also lastly say in closing is that next week being Thanksgiving, I have to be on the road on Tuesday, so I'll probably not do any videos next week. I probably won't have the time. If I do any, it'll be on Monday. But again, we're probably going to be posting. Our intention is to post with Thomas, a follow up on the Nextech thing, just because we can spend a little more time than I have right now, and we can bring in Thomas's deeper knowledge of the company from his following the story for a long time. So with that, we'll see you on Saturday and possibly Monday, but all in likelihood, I'm going to take, as far as doing these videos, I'm going to take next week off. Hope you have a wonderful Thanksgiving with your family, and let's all go out and try to make, despite the economy, 2023 a very profitable year. Take care, folks.